Hey everyone, me Kevin here. Wanted to touch on briefly why this market feels like it just can't crash. It's like impossible to get this freaking market to go down so we can buy the dip. It is so difficult. We've got so many uncertainties right now. The Evergrande and the potential for contagion coming out of China. We've got the FOMC meeting. The Bank of Japan meets this week to talk about rates. We've got the taper talk. We got the debt ceiling, the infrastructure talks. We've got so much inflation, economic growth slowing down. Everything that we could want right now bundled up into a pile of doo-doo. And people are smelling the doo-doo and they're like, that's all right, I'll hang out here anyway. It's like not leaving the market. You just can't get this market to sell down. It's crazy. And I think I know a reason. So I've been looking at this because I've got a pile of cash that I hoarded up here, and I was watching the S&P kind of trend down throughout the day here, and I'm like, this is what I was expecting, dead cat bounce, which dead cat bounce is literally figuratively, imagine a dead cat that it's already dead, it's okay, we're not killing it, it's already dead, it died of natural causes, and you threw it off a building because, there was a very nice soft grave at the bottom or whatever, and the cat falls, hits the ground, like yesterday, we fell in the stock market, right? This was, here was your yesterday. Here's your fall, and then you bounce, because even dead things, when they hit the ground really fast, they bounce up a little bit, and then they come right back down, right? And so that's kind of the argument here. It's like fall, little bit of bounce, and going back down, right? But the thing is, it just feels like every time we get a little bit of this pull down, we just buy the dip and kind of bounce back up. And so I had the same thing happen on Enphase to me. So this morning, I sent out an alert, and I literally bought Enphase right here. It was perfect. I was watching this on the minute sticks. I saw it turn green, and I put my order in, and I'm like, I'm ready. If I see that next candlestick go green, boom, went green, put the order in, sent out the alert, buying Enphase, threw in 6 figures into Enphase here, sent out an alert to everybody in Stocks and Psychology and Money, as I usually do. But then I'm like, dang it, I should have bought even more, which is always like the problem with stocks. Like, you buy something and you time it well, then it goes up, and it's like, should have done more. You do a bad job and you're like, should have done less. But you got to break that psychology. You got to get over it. You move on. You always got to look forward in investments. And so this is where I'm trying to understand. Why is it that we could sell down 4% on Tesla, but then we're immediately up 1.5% the next day? Why is it that we can go down 10% on Matterport and then we're immediately up 7.7% the next day? Why can we go down 8% on Lucid and then literally go up 8% on Lucid again the next day, right? And the reason that I believe we're seeing this happen is pretty simple. I'm going to pull this up really quick. What you want to type into Google is Fed Reserve reverse repos. There's a reason for this, okay? Look at this. So you type in Fed Reserve reverse repos, and you get this chart here. This chart tells us how much cash banks and institutions have. And if you really look historically here, it's the highest it's ever been in its existence. You've seen this massive amount of cash being hoarded. And this line here is a representation of how much cash banks are parking at the Fed because they have too much. They don't know what to do with it. They have too much cash. And personally, I believe that even though we have a lot of these uncertainties in the stock market, I believe that we get these short dips where it's like, oh, we're red. Oh, that's pretty red, that's pretty red. And then we bounce up pretty quickly because there is so much money and there is so much of an appetite for buying the dip that it is actually frustratingly difficult to get a meaningful dip. And so part of me believes that there is this potential of just trading sideways because all of these dips tend to get bought up pretty quickly to where maybe it makes more sense to just again sell calls, like buy the shares and then sell calls, or just sell puts and try to get in a little bit cheaper to increase your yield a bit. Are we actually going to see a larger run? That's the downside, though, about selling puts. And this is kind of where you get to this moment where it's like, if you sell puts and then it runs, you miss out. Like, for example, let's say on Matterport, you sold puts when it was, trading back and forth over here. And it fell a little bit, and you sold puts at $14 or whatever. Well, cool, you would have gotten maybe $1 or $2 credit or whatever. That'd be like net selling it for $16. But then it runs. Then you miss out, right? And if you own call options, well, great, call options are really sexy. Like if you buy a call and the next day it runs. Like today's call options for October 15th, I bet you were way up. Yeah, look, they're way up. They're up 48% because the stock's up 8%, right? That's amazing. That's the leverage of these short-term calls. So this has kind of left me thinking to myself, okay, so I don't want to do leaps in this market because I do believe that leaps will end up getting chewed up by theta decay. So leaps are not something so desirable right now. I do like the idea of selling calls when something has run, when running. But the danger of this is it could continue running. So, for example, you might sell calls on Matterport at $18 and then it runs to $24, right? And it's like, right? Then your sell calls actually hurt. Selling puts is something that I would like and generally do like doing on stocks that I don't necessarily need to own more of, but I'm not opposed to owning them. So I wouldn't sell puts on something I did not want to own, but I'd consider selling puts on things I'd be willing to own. And I think the best thing, and it's boring, but it's just buying shares. And really what we're trying to do with buying shares is we're trying to prepare for a broader rally once all of these negative catalysts go away. Evergrande goes away. The debt ceiling limitations go away. The issues with the Fed taper go away. Inflation inflects downwards. The supply chain shortages flip to the other side. And this is something where all of these things, I personally believe, will have a very large benefit on particularly stocks like Enphase. Enphase is affected by the chip shortages substantially, holds it back. Enphase is a company that is part of the solar revolution. And with less competition from solar now, with the solar leasing from Tesla, I actually think you've got even more room to run on Enphase than when Tesla was a bigger competitor with their active solar leasing. So, I think the big bottom line message here is the market has so much cash right now that only sitting around waiting for the dip is something that gets bought up so quickly that you end up frustrated. Now, the downside is, or the risk is, that you end up just throwing all your cash into the market and then you actually get a real dip, right? Then it's like, dang, should have had some cash. But there is a risk to being too cash heavy, potentially. And that's because everyone's cash heavy. So every dip keeps getting bought. And that's a frustrating thing in the market right now. So what's the big bottom line of all of this? Big bottom line of all of this is, look, I'm a big fan of holding cash. I like holding cash, like the RCC. I like trying to time some trades. But with how much money people have, this is a very frustrating market to wait for dips on. And to expect those dips to be super deep. It's just something I'm realizing. It's because so many people have so much money, all the dips get bought up right away. So worth keeping an eye on when there's a dip. Potentially pull the trigger a little bit earlier if you are trying to place money and you're getting a little bit too cash heavy. Anyway, hopefully this was helpful for you. And folks, we'll see you in the next one. Thanks. Bye.